Hello, everyone. Welcome. Let's continue our discussion on long-term construction contracts. Okay, we have answered the same problem, but this time we're going to assume letter B. Outcome cannot be measured reliably. So if the outcome cannot be measured reliably, the use of percentage of completion is not permitted. We're going to use the zero profit method. Now, just to give you a brief explanation on the basis of using zero profit method, it depends on whether the outcome can be or cannot be estimated reliably. If the outcome can be estimated reliably, we may use the percentage of completion method. Otherwise, just like what I've said, zero profit or the cost recovery method may be applied. The outcome of construction contract can be estimated reliably when all of the following conditions are satisfied. So with this requirements or conditions, we may be able to know or determine the method that we're going to use. So if all of these are met, then we can use percentage of completion method. But if any one of this is not satisfied, then the zero profit or cost recovery method is advised. So what are these conditions? First, the total contract revenue can be measured reliably. And then it is probable that economic benefits associated with the contract will flow to the entity. The third one is the contract cost to complete the contract and the stage of contract completion, which is also known as the percentage of completion, at the end of the reporting period can be measured reliably. And the contract cost attributable to the contract can be clearly identified and measured reliably so that the actual contract cost incurred can be compared with prior estimates. So these four items must be met in order for us to use the percentage of completion. Otherwise, if any one among these four items has not been satisfied, then we have to use the zero profit method. So for the zero profit method, the revenue to be recognized should be equal to the cost incurred. Okay, so these are the costs incurred for 2019, 2020, and 2021. As you can see, in 2019, the revenue amounted to the same amount of cost. And that's why there's no profit for this year. That's why it's called zero profit method. So we are a little bit conservative. No? And we are not going to, even though we expect that the project, the construction project could be profitable, but since the outcome, that outcome cannot be estimated reliably, so we cannot rely on it, then we just have to recognize the cost, as the amount of cost as our revenue. So that's for 2019 and 2020. As you can see, the amount of cost are the same as the amount of revenue. However, in 2021, as you can see, the amount of cost is now different from the amount of revenue. And why is that? Because in 2021, the outcome is measured or can be measured reliably. No? Here, we do not estimate anymore. And we all know the actual amount of cost incurred. And the transaction price, the total transaction price is greater than all the costs incurred, the total amount of cost incurred. And that's why we have here a different amount for the revenue. So how did we arrive at 2,156,250? So in 2021, at the last year of the project, since we are now able to determine no, the amount of cost, no, or the outcome itself, then we just have to deduct, no, all these revenues, the 6,562,500 and 4,406,250 from the total transaction price. Again, how much is our total transaction price? That's 13,125,000. So 13,125,000, ima-minus natin ang 6,562,500 and the 4,460,6,250, you will arrive at 2,156,250. Okay? So that's how we compute for the revenue at the end. So that's how we compute for the revenue at the end. And the last year of the project. So here, as you can see, there's a profit already, and that's 1.5 million. Okay. Now, aside from this revenue, cost, and RGP, how do we compute for the items that will be presented in the balance sheet? Okay. So we have the same formula to compute for the contract asset or contract liability. And that is the difference between the cumulative revenue or revenue to date and the cumulative billings. Yeah. So the cumulative billings are the same as what we had now in percentage of completion method. So that's 3 million, 12 million, and 13,125. So how do we compute for the revenue? So here, computing for cumulative revenue will be based on the revenue amount that we have computed under this table. So for the year one, of course, so we will have the same amount. So 6,562,500. Now, in 2020, and the cumulative revenue, all we have to do is to combine the revenue from 2019 and 2020 to arrive at 10,968,750. And then, of course, in 2021, the last year of the project, the cumulative revenue must be equal to the transaction price, which is 13,125,000. So as you can see, and we arrive at this amounts in 2029. As of 2019, we have 3,562,500 contract assets. And then for 2020, we have 1,031,250 negative. So it means it's a contract liability. So we have billed our customers more than what we have performed or rendered to them. Okay, that is 10 million, represented by cumulative revenue, of course. So please take note of these amounts as we're going to use them in our preparation of journal entries. So again, as of 2019, that's positive. So it's a contract asset, 3,562,500. And then as of 2020, we have negative 1,031,250. And then of course, for 2021, it would be reverted back to zero. And because the cumulative revenue as well as the cumulative billings, and of course, the transaction price will all be equal. And the net amount, of course, would be zero. Okay, under this method, the revenue to be recognized will be the same as the cost incurred until the uncertainties become known or until the end of the project, whichever comes first. So what does it mean, sir? So we have applied this one until the end of the project. So in this case, in 2021, since this is the last year of the project, we have identified, we have eliminated rather the uncertainties. Because at the end of the project, at the last year of the project, all uncertainties become known. So we are able to know the actual cost incurred, the total actual cost incurred, and of course, the total amount that would be received from the customer, which is equal to the transaction price. So let's say the uncertainties become known in the middle of the project, let's say in 2020. So what are we going to do? In 2019, the outcome still cannot be measured reliably. So we are using zero profit method. However, come 2020, now whatever the uncertainty that we had in 2019 were discovered, or were known in 2020. So now, In 2020, the outcome can be measured reliably. We have to apply na percentage of completion. But it has to be applied prospectively. So we are not going to uh, change what we had in 2019. I mean, all of these items should not be changed. No? Okay, they will remain the same and all adjustments will be applied or affected in 2020. That's why it is applied prospectively. Okay, so that's it for the computational part, and we proceed to the um, journal entries. So how do we prepare journal entries? Yeah. So for 2019, these three items upon incurrence of cost, or these three events, incurrence of cost, billing to customer, and collection, all of these will be the same. And same with the percentage of completion method. Okay, the only difference would be on the income statement recognition. Definitely, we have a different amount for the revenue, okay? Because the revenue here, it will be equal to the contract cost or the cost incurred. This is 6,562,500. So 6,562,500 also. And then the debit will be contract liability and the credit is revenue. Okay? Now, for the cost of construction, we'll have the same entry, of course. So 6,562,500 also. Now, if the contract liability if the contract liability account has a negative or debit balance, meaning the contract revenue, the revenue recognized is greater than the amount billed to the customer. That's why we have contract asset. Okay. So this adjustment must be made. So we have to recognize the contract asset, which is 3,562,500, and credit contract liability. Okay. To eliminate, of course, the negative balance and to recognize the contract asset. Because as what we have computed, this is indeed a contract asset. No? And it's positive amount. So 3,562,500. So it's just a mere reclassification. No? You just have to report this in the asset portion, not on the liability portion. Ayan. Okay, so we have a contract asset amounting to 3,562,500. Okay, so this one, 3,562. So this entry is just to reclassify the contract liability account into contract asset because it's a positive amount. The net amount is a positive amount and therefore it should be recorded as contract asset. Okay? That's for 2019. Come 2020, yeah, we have the same amount of cost, progress billings, and collections also. Now, same with the percentage of completion. Again, the difference would be on the recognition of the income statement account, which is the revenue. Okay, so here, again, the revenue will be the same as the cost incurred. Okay, and then the recognition of course, the cost of construction will be the same. So that's 4.4 million. Now, last year, the amount presented in the balance sheet, that's what we have computed, turned out positive, and that's why it's contract asset. But now, based on what we have computed, it is now contract liability. So we the amount billed to the customer is higher than what we have rendered to the customer, represented by the revenue. Okay. When we compute for it, or when we adjusted the contract liability, the negative balance of contract liability in 2019, so we made this entry. Yan, debit to contract asset and credit to contract liability. But now, since it's contract liability, yun na ngayon na-compute natin. Okay? So we have to revert it back. to contract liability position. And how are you going to do that? You simply have to reverse this entry. So, paano i-reverse yan? Okay, so contract liability, debit, 356,500, and credit, contract asset, 3,562,500. Okay? Come 2021, so for these three items, again, it's just the same. Then for IS recognition, so your contract liability and revenue will be 2,156,250. Okay? Sir, bakit 2,156,250 na lang? Okay? This is based on this computation. Okay? So we have computed already for this one. We deduct all the revenues recognized in prior years, from the total transaction price. And we get, of course, the remaining amount of revenue that is yet to be recognized as of the beginning of 2021. So we recognize 2,156,250. And of course, for the construction cost, it will be the same journal entry. So 656,250. Same with percentage of completion, we can take note of these considerations, or we can take note of these realizations. First, and at the last year of the project, the contract asset or liability account will automatically revert to zero. Okay? Bakit? Since the cumulative revenue and the cumulative billings are now equal to the total transaction price. So they are of the same amount. Basically, the net amount would be zero. Then, okay, the cumulative revenue will equal the transaction price. And lastly, the cumulative billings will equal also the transaction price.